This week we'll actually talk about flat. Okay, so before we go into that, I'll need to share with you, flat is actually a correction pattern. Okay, so I'll draw out to show you how it looks like. Okay, so all the time we always say that after an impulse, if you see a correction like this, then very clear cut, you actually trade to the downside. Okay, so this is a correction called ABC. Okay, it's a very common correction. Flat gives you something like this, an impulse, and then it goes 1, 2, 3. So you can see the difference. Okay, but what you need to understand is ABC here and the flat here are both corrective patterns. That means after this correction is done, the next likelihood is still downside. This one here is also downside. Okay, can you understand so far? Okay, so this one here, I think all of you should be very clear, which is the ABC. Okay, how you measure ABC is the ratio 1:1 or 1:1 to 3.6. Okay, today I'll talk about flat. So flat here, we have generally 3 types of flat. Okay, so the first type of flat is what we call a regular flat. So it looks like this: 1, then impulse, then you have 1, 2, 3. Okay, so a regular flat you can see is horizontal. It will give you a very nice double bottom, double top. That is your regular flat. In today's trading environment, you seldom see that already. Okay, because you have your algo, you have your tag going on and things like this. Seldom you see so nice regular flat in today's environment. The next kind of flat, okay, you have an impulse, the same thing, right? But this flat here is 1, 2, 3. Then it goes down. Okay, so this flat here, you realize it breaks your bottom, it breaks your top. Okay, this one here is what we call an expanded flat. Okay, because you can see it broke the bottom of this low, it broke the top of this low. Okay, the characteristics of a flat usually is that it will go impulse, impulse, impulse. That means on a smaller time frame, this move up is strong, this move down is strong, the move up is also strong. Okay, so that's why we usually say when you see a strong impulse, wait, because if you want to trade a flat pattern like this, it's very difficult because each move is strong. Okay, then the last kind of flat, okay, is actually a running flat. It looks like this. You have an impulse down. Okay, it goes 1, 2, 3, and then it goes down. Okay, so you realize this one is it breaks the bottom, but it never breaks the top, or it haven't even reached the top. Okay, so this kind of flat is what we call a running flat. Okay, this one here, when you can expect kind of running flat is when the momentum, the downside momentum for this example is very strong. Then you usually see some sort of running flat. Okay, so running flat, does it happen or does it occur in currency market? Yes, also. Okay, but most of the time, more often you see running flat in your stock market. Okay, in FX you actually see a lot of expanded flat as well. Okay, but regular, you seldom see it in today's context anymore. Okay, so how we label this, that means if you want to put in your labeling so that you know what it means, we usually use ABC. So instead of sometimes you see if it's a 3-move structure, I'll use WXY, right? Okay, so that is actually a distinction between ABC and WXY. So that's just a labeling, alright? So a 3-move, you can put it as ABC, you can also put it as WXY, but I'll usually put WXY for 3-move. Okay, for flat, all of the flat is actually labeled as ABC. Right, so if you're looking at this, you have your expanded flat is also ABC, you have a regular flat is also ABC, and then your running flat is also ABC. Okay, so this is how you label it, and this is how it looks like. Okay, if this is all downside, okay, if it's going up, then you just flip it the opposite. Okay, next thing here is how do we find or how do we actually can engage a flat pattern. Okay, so most of the time I would suggest if you don't see a normal zigzag, or you don't see a normal ABC, or you don't see a normal corrective pattern, 3-wave, don't trade it, because a flat is very difficult to trade. Okay, but if you really want to trade it, there are some very distinct methodology that you can go and engage the end of the flat, meaning we don't trade within the flat, because flat is also a correction. We'll trade at the end of the flat, which is at the end of correction, which means you will expect an impulse move after that. Okay, so for the first one, which is your regular flat, if you want to put in your fib, okay, is actually almost 100% and 100%. That's why it's regular. Okay, which means you actually really see a double bottom, a double top. So how you trade this kind, if you want to trade it, is that you enter a sell, okay, at the top of A, and then your stop loss slightly above, and then your take profit below lah. That's how you can engage it, meaning you engage it as if it's a double top. Okay, so usually this don't happen, so my suggestion to you is do not forecast a regular flat, because if it gives you an expanded flat, you get stop out before it moves in your direction. Okay, so my suggestion to you is if you are first already seeing your A move here, your B move here, impulse very strong, and it starts to give you a very strong up move for your C, which is your third move of your flat, don't go and trade it. Okay, because don't go and expect it's gonna form a regular flat and then it's gonna turn, because most of the time it won't give you that irregular flat and then you get stop out. Okay, so this kind here, my suggestion is don't trade it. Okay, so if you want to trade flat, my suggestion is always forecast an expanded flat. Okay, because why the logic is there is because if you forecast an expanded flat, your entry will be actually around here. Later I'll share with you the ratios. Your entry will be on top. Okay, so if out of these three flats, alright, if it doesn't give you an expanded flat, you are safe. Meaning you won't enter the trade, you won't make that money, but you are safe because you won't get stop out. But if you forecast a regular flat and it give you an expanded flat, you get stop out. Okay, if you forecast a running flat and it give you either of this, you also get stop out. Okay, so the safest way to trade flat is to trade it with an expectation that it's going to form an expanded flat. Okay, so that's one tip, the first tip now. Okay, so that's how you can engage on flat. To also show you how to measure flat, there's this common fit ratio. Okay, we don't measure the B, meaning we don't use fit ratio to measure our B, because if A form, B form, we still don't trade it because we want to trade the end of the correction. So if your A form, B form, and C starts to form, then we have this common ratio using extension. Yeah, our common ratio for C will be at 1618. Okay, so between 123 and 1618, somewhere around there. I'll drag a little bit. Okay, so can see that's the region. Yeah lah, of course. Okay, so that is where the region that you want to look out for. That means when you want to trade a flat, always forecast a 1618. Okay, that means if you want to put your entry, you either put 123.6. Okay, if you put 123.6, your stop loss needs to go above 1618. If you put 1618, your stop loss can be pretty tight, just slightly above it, and then you can expect that down move to come if it's gonna give you an expanded flat. Later, I'll share with you more tips in how to identify that high chance it's gonna be expanded flat. Okay, so this is a quick ratio to share with you. Expanded flat, the C move is 123 to 1618. Okay, so move on to running flat. Okay, running flat over here, the ratios that you can expect is not 1618, but it's between 1 to 123. Okay, so that's the difference. So this one I draw slightly short now. Let me just extend it now. Like this, then come down. Okay, so the area for running flat is 1 to 123.6. Okay, so if you want to short it, okay, you short it at 1 or 123, your stop loss is above lah. But I mentioned just now, right, that if you want to forecast a flat, don't go and forecast a running flat, because if it gives you that expanded flat, then you get stop out before the whole move even start. Okay, so for this one, my recommendation is as best as you can, don't go and forecast and trade a running flat. Okay, so the ratios here is pretty straightforward now. Running flat is 1 to 123, expanded flat is 123 to 1618. Okay, so when I mentioned that we always, if you want to trade flat, we focus on expanded flat. So how do we identify characteristics of what an expanded flat is going to look like? That means, how do you identify that, likelihood that your expanded flat is going to end at this area? Okay, so the first key thing that you want to focus on is, if I zoom in to this, that means I draw in, I move up, I draw another one to show you. Okay, so if I use line, this is my impulse. Okay, then I would have A, pretty strong, B, pretty strong as well. Then my C starts to form. Okay, if my C starts to form impulsively, that means pretty strong up move as well, then I can now start expecting that this is gonna be an expanded flat. Okay, if the scenario is this is an impulse move, this move here is slow, I won't go and forecast a flat. Okay, because if this is slow, high chance it's just gonna give you a typical zigzag or typical ABC move. Clear? Okay, so flat, the nature here is it goes up very strong, it comes down very strong, and then it will form a very strong up move C as well. Okay, so once this is start to form already, what I'll do is I'll start to put in my fade. Okay, so between these two area. Yeah, so most of the time, this one here won't come so deep. Okay, so most of the time your 1618 is actually breaking above your previous high one. Okay, so in this case, let's just stick to 1618. Okay, so when I see this on H4, for example, okay, how do I identify that high chance my expanded flat is going to end here? Is that I will drop to lower time frame to give me that confirmation. Okay, so if this whole thing here is happening on 4 hour, what I'll do is I want to go lower time frame to identify this last C move. Okay, most of the time this C move, if I go smaller time frame, I'll change the color. If I go to smaller time frame, which means now I drop to from H4, I drop to H1. Okay, the color is now blue color is H1. Yeah, I will actually see 1, 2, 3, 4, and 5. Okay, which means on my higher time frame is actually just one move, black in color. But lower time frame, that means from H4 I go to H1, this last move you can expect a 5-wave structure. Okay, so last week we covered a 5-wave structure. If it's gonna give you a 5-wave, right, your third wave and your fifth wave usually would have a divergence. Okay, whatever momentum indicator you use will have a divergence. Then the next clue that you can check out for your fifth wave is usually it's going to give you that wedge or a crawl pattern. Okay, so if I start to put in my count to label and give you ideas what I mean, this will be your 1, 2, 3, 4, 5. And then on a higher time frame, this will just be your A, B, C. Understand that? Okay, so if I zoom in this area, that means I focus on this part. How you should expect it to form is 1, 2, 3 is very strong. Okay, 4, and then 5 will give you this 1, 2, 3, 4, 5. It gives you this product pattern. Okay, so if I put my labeling, it looks like this. 1, 2, 3, 4, 5. Okay, so this 5 here, over here, this 5 here is an illustration of how you can expect it to form. So when you see something like this and then it confluence with your ABC expanded flat expectation, then you have a very high chance of catching this end of the expanded flat. Can understand? Okay, so when you see this, most of the time your 3 and 5, as price goes higher, your RSI or MACD or stochastic, whatever momentum indicator you use, you will see a divergence. Okay, so when you see this, naturally you will expect the next move is down. Okay, so the same for this one. The next move you are gonna expect is actually down. Understand? Here, any questions so far for this aspect? Any questions? No? Okay, if not, I'll go through, I'll scan the market quickly to see if there's any example. But if I'm not wrong, the most recent one that we actually talk about or discuss more a little bit is actually your Euro Pound. Right, but I want to just quickly update what is the outlook as of now. So if you realize this, initially before all this happened, what we are expecting is this move, right? A, B, C. That means we are actually expecting this. Okay, you can see your B actually break your previous low. Your C has already broke it. Okay, so once this is formed, that means this is our impulse. Okay, as of now, all the way until here, you can see that this whole portion is still a potential forming correction because it takes very long. It hasn't break your previous high. Okay, so as of this, that means when you look at market, as of this like this, it's still potentially giving you an expanding flat. Okay, so if you're expecting an expanding flat, you're gonna pull in your ratio. Okay, you're expecting it to come between 123 and 1618. Okay, that means this region. So what you can expect also, just now I mentioned that this up move here, that means your C move of your expanded flat, you will expect some form of a crawling up at the end of a C. Okay, so as you progress, you can see market starts to form that kind of correct crawling up movement. Okay, but the thing that you need to take note is it cannot break your previous high. Okay, because if it breaks your previous high, it's no longer giving you a correction anymore, because this is your impulse. Your correction cannot break it. Okay, so what you realize is as market developed as of late last week and this week, all right, you can see it broke it. Okay, so if you expect a flat to form this region complete here, you expect a down move and it broke above your 1618, and more importantly it broke this, that means this forecast of an expanding flat may not be true anymore. You need to change your analysis. Okay, so before this even happened, you can still expect an expanded flat, but when this happened, which means it broke your high over here, you should no longer expect an expanding flat. That means your analysis needs to change. Okay, so in order to do that, if I'm not wrong, Jerry did alternative count on weekly, right, on Euro Pound. Do daily. Okay, so if you look at this, initially we expect one as an impulse, right? Then you expect the 3 move correction, which is A, B, C, and then one more move down, right? But market break your top here. Okay, and this one went above it. So when it does that means when it break that count, that means market has more potential of going higher, right? So what you can expect now is this is not your end. That means it's not the highest already. So what you can do now is adopt something that we discussed last week, right? If let's say market is going higher, this cannot be your end of the count or end of the structure, which means this gives you potentially a third wave. Okay, so what you have is 1, 2, 3, 4, potentially market is giving you a 5. Okay, so if this is your forecast, that means now I refresh, put in the labeling. This is 1, 2, 3, 4, and then you're expecting 1, 5 up, right? Okay, so if you do this count now, all right, so that's why Elliott wave people say it's very subjective, but you need to understand based on impulse and correction to give you more objective way of labeling it. Okay, so that before this happened, that means before this move break this top, okay, we don't forecast this because we are seeing a correct crawling up movement. Okay, but now it has broken that top, we need to be updating our analysis. So now this analysis becomes this has a higher chance of forming now. Okay, so what you realize is this one here, if you recap last week, if you want to measure your 5th wave, you use from where you start all the way to 3, pull it, the 3rd point is 4, right? The ratio that you are looking out for is 618 and 382. Okay, so your 5 is actually this region, yeah? Okay, most of the time it will tag that 61.8, but as long as it hits 38.2 means it has meet the minimum requirement, means it doesn't need to go all the way up there, it can start to come down already. Okay, but as a trader, you always expect it to tag that level, that means touch that level. Okay, so your 5 is all the way up there. Okay, so now if you expect this, let me show you then what is your wave 4. Okay, so if I zoom back down to daily, okay, you realize then your wave 4 here gives you This is your A, B, okay, B is here, then C is here. Okay, so what you realize is now instead of an expanded flat, okay, this forms back your regular ABC. Yeah, so that forecast needs to change when the market gives you updated information. So that what I want to share with you is don't go and fixate your analysis that the market must follow your analysis. It's actually the other way around. That means your analysis must follow what the market is feeding you. Okay, so in this case, we now expect fifth wave to end here, right? Do we long? No, because this whole move here on daily is also losing, it is going up very unsustainably. When I mean unsustainably means this whole move is not healthy. If it's gonna be an up move that is healthy, it needs to give me this. Once it gives me this correction, then it becomes healthy and it's sustainable. That means you can now expect one more push to the upside. But this haven't formed, don't go and long it, because anytime it can still come down. Okay, so you realize that if I go 4 hour, okay, this whole move here is also what I mean not sustainable, because it haven't give you that 1, 2, 3. It needs to give you that correction down, then it becomes sustainable to look for upside. Understand that? Okay, so if you ask me Euro Pound, is it still upside potential? There is still potential to go higher, but based on trading setup, there isn't yet. Okay, if I put in my RSI, okay, it might start to form some form of divergence. Let's just check. Okay, so if this so right now here is no divergence. Okay, but if it's gonna form your 3 and 5, usually you want to expect a divergence. Okay, so let's just do quick check. Okay, so far this divergence is not very clear. Okay, so if let's say price continue to go higher, but your RSI doesn't break this high, then you would see a divergence happening already. Okay, so what you need to do is you start to put in layers of what you have learned to tell you whether it's gonna give you that high probability trade to take it or not to take it. Okay, this is not yet formed, okay, but potential you can start to expect it. Okay, so if I go to 4 hour, this is dollar CAD. Okay, so it is not yet formed. It's still very early stage, but I want to show you that at this stage you can also start forming. Okay, so very clear dollar CAD is this is your impulse. Okay, this is your impulse. Alright, so right now what is forming is very early stage, but you can see this move up is pretty sharp. Okay, this move down is almost equal to the how fast it went up. Okay, if you go and measure the time, this one here, I map it, is about that. Okay, and you can see this move down is sharp. Okay, that means the magnitude of price is also significant. Okay, so when I see something like this, that means this move up is strong, this move up, this move down is strong. Now I can start to expect that we are potentially seeing a potential flat. Okay, because just now I mentioned that flat has 3 moves, and that 3 moves usually come fast and sharp. Okay, so when you see the first 2 moves is sharp, now you can expect a potential flat to form. Okay, so right now this low has not been broken. Okay, this low has not been broken. Okay, so this low has not been broken means if it starts to turn, I need to erase that. Yeah, if this low is not broken, meaning if this is gonna go 1, 2, and it starts to turn from here and 3, then it becomes your regular ABC. Okay, but if your market breaks the low, giving you 1, 2, it tags the low and then go up, then it becomes a flat. Then what you have is either a regular flat, an expanded flat, or running flat. Okay, so what I'm going to do is, let's assume it did break a little bit, right, for practice purpose. So assume that price, let me just draw that in. Okay, let's just take a few data and map it. So assume price did this. Okay, so price actually breached that already. So for practice, right, what I'm gonna do is now, after it breach, okay, price starts to give me this pattern. Okay, so now it starts to show that it's going up again. Okay, so what I can do right now is, with all this information, I already can expect that perhaps a potential flat is already forming. Okay, so I will always forecast an expanded flat straight away. I won't be interested to forecast a running flat. Okay, because a running flat is again very difficult for you to go and trade it. So now I know that this is the area that I can expect this flat to complete, which means that this is the key area that I'll be interested to look for a short setup if it happens to be to the market. Right, so I'm gonna wait until the price comes all the way up over to this area, and now I know that if it's gonna form an expanded flat, this will be my A, this will be my B, this will be my C move up. Okay, my C move up, of course, market don't go straight up like this. Okay, but when I shared with you just now, flat is sharp move, sharp move, sharp move, right? That means this C sharp move is potentially gonna develop as a 5-wave move up. Meaning this is your 1, 2, 3, 4, and then your 5 maybe giving you a crawl up movement. Okay, so then this will be 1, 2, 3, 4, 5. Okay, so how do I put two things together is my 5th wave, I want to make sure that it crawls up slowly. 1, 2, 3, 4, 5. It gives me that wedge pattern. Okay, so with that combination of a correct crawling up movement, which is a corrective up move, combined with this fit on higher time frame is an expanding flat, like this. Okay, then I can look for a short over here, stop above, and then this you can expect it to go all the way down, like this. Can follow? Yeah, so that's the process of how you can start to expect or forecast a flat. Okay, but the idea here is, can you trade this up move? You can. Okay, because this up move is potentially sharp and strong as well, right? But what you need to make sure is, if let's say you are really a 4-hour trader, this move here, it might be very difficult for you to catch it. Okay, so if you really want to catch that, then you need to go down 1 time frame lower, then it becomes very clear to trade it. Okay, so to trade that, you always need to expect a smaller ABC now. So that means here you need to wait 1, 2, 3, then you trade the upside. Then here 1, 2, 3, you can trade the upside. Here, so the concept is always the same. That means always wait for that 3 move to give you that correction. Okay, okay, so this example, any question? Yeah. Okay, so another one on dollar franc. Okay, so seldom I will look at franc, but if you see something like this, sharp move, sharp move, sharp move, right? It's usually a flat. Okay, this one here, you see this is a very sharp move up as well, and then after that this is a very small crawl, and then after that it gives you this 1, 2, 3 down. Okay, so what you realize is this 1, 2, 3, after that, right, it didn't continue to go up, but instead it come down. Yeah, so I will put that drawing in again. 1, 2, 3, but instead of going up, it comes down. Okay, so that's the part where how can you then protect yourself such that you don't get yourself trapped into such scenario. Okay, the technique here is, if you see, again, apply the simplest technique that I cover. If you see an impulse, you don't do anything. Okay, then the next thing you realize that this one here gives you a correction instead of a sharp up move. Okay, because if it's gonna go up, it needs to give you 1, 2, 3, and then an up move like this. Okay, so what you realize that instead of this up move here, the market gives you a slow crawling. Okay, which means this is a correction, this is an impulse. And that's the reason why you wouldn't want to long it over here, but instead, if you are looking to short it, you are looking at impulse, correction, impulse. Okay, so that's the part, that's the tricky part, that if you want to trade flat, it's slightly more risky. Okay, unless you want to wait for a confirmation, which means you wait for impulse, wait for correction, then only you will go and decide which direction you want to trade it. Okay, so tip here is, let's say now you see this as fast move up and then it's coming down pretty strong. The tip here is, if you see a lot of impulses on this time frame, if you zoom it out, you're actually on a larger correction. Okay, so the tip is always, when you see a lot of strong move on your time frame, there's no correction, means on higher time frame you are seeing a bigger correction pattern, which means dollar franc, this move here can be a correction. Okay, dollar franc is definitely, your bias on daily is still down. Then this move here can potentially give you up, down, up, and then maybe down again. Okay, so very clear is on let's say on your specific time frame that you are looking out in the market, there's a lot of sharp move like this. Go to higher time frame, it becomes clearer what is happening. Okay, yeah, that's the technique to look at the market. Okay, so flat, clear. That's exactly how the process I apply to identify a flat and how to prepare yourself if you want to trade a flat. Okay, let me see Euro Yen. Okay, see this? Whoops. Strong move down. Then you are seeing this retracement is pretty sharp. This move down is pretty sharp. The next move up here breaks the top, breaks the bottom, breaks the top. Okay, so this potentially, okay, it can give you A, B, C. Okay, not all the time this means ABC, because if market does this, crawl down, then don't go and still force your analysis as it's a flat, because if this is developed, this correction is developed, the higher probability is up. So don't go and force your analysis and say that, oh, because it's a flat, market must go down. It's not the case. That's why I say always read what the market is giving you, base your forecast on that. Okay, so if let's say market give us a correct crawling down here, how would your analysis change? That means this one, instead of A, B, C, how will your analysis change? Because if this is a flat, then this must come down sharp, right? But instead market shows you that it's crawling down, which means the next up, the direction higher chance is up, right? So how would this ABC change? Very good. So Jerry is fast, yeah? So your ABC is A will be here, B will be here, C will be here. Then this is actually your start of your first impulse, a correction, and then impulse up. Okay, so what can this be the case of A, B, C? It meets that 3-move correction. And then if I give you to daily, can that be? Can. Okay, meaning it can be this is a correction and then you start to see up move. Okay, but what I will expect is this: after such a strong move up, usually you will see some form of correction. That means this correction is maybe not done yet because it's very small. Okay, most of the time when you see 3 strong up move already, you want to expect the correction that follows is gonna be pretty deep. Okay, so all this comes with little things that you combine what I share here, you put them together. Yeah, so would I be aggressive looking for buy? Maybe not, right? Because I understand that higher time frame, I'm gonna expect this correction to come down slightly deeper. Okay, and if you are trading Euro Yen, look for Dollar Yen to give you that tip. Dollar Yen right now, if you look at this is your ABC 1, 2, 3, right? Then right now here, what is giving you is this is another 1, 2, 3. Okay, then now it's giving you perhaps your third move down. Okay, if dollar yen you are expecting it to drop, your yen pairs usually would have certain direction following the dollar yen. Okay, so that's why if I combine all these things that were covered, that means this is actually covered in correlation. Okay, if you combine all these things that is covered, you will now have more understanding of how you want to trade the euro yen. Okay, I'm not saying that you cannot long it. I'm saying that if you long this, just be maybe more cautious that it can still give you a deeper correction. Okay, so if you ask me if I'm going to forecast euro yen, how am I going to forecast? I would forecast that this is potentially my ABC, which means I'm actually expecting the correction to haven't complete yet, and I'm going to expect one more move down. Okay, because of higher time frame perspective. You get that? Okay, so when you do analysis, don't only stick to one time frame. Go one time frame higher, one time frame lower. That means if you're looking at 4 hour, go daily, go 1 hour to understand exactly more information what's happening. And then if you need even more information, go to your correlated pairs to understand how they are performing as well. Okay, of course all these are still technical analysis, so you can combine fundamental and things like this as well.